This Week in Economics on the 26th of December 2015. Our last program for 2015, it has been a run, no doubt. With petrol or gas prices going down, we'll be talking about that. We'll also be looking at the third quarter GMP figures from the Bureau of Economic Analysis. And we'll also look at several other things from the BBC and Bloomberg with the Federal Express disappointing some. We'll get the oil rig count, of course, from the Baker people, and from the U.S. Energy Information Agency. We'll round those ballparks, but we'll start off firstly with the information from the Bureau of Economic Analysis. I think hopefully that's what we call them. Nonetheless, this was issued on the 22nd of December, Tuesday. Real gross domestic product, the value of goods and services produced by the nation's economy, less the value of goods and services used up in its production, adjusted for price changes, increased at an annual rate of 2% in the third quarter of Q3 of 2015, according to the third estimate released by the Bureau of Economic Analysis. In the second quarter, real GMP increased 3.9%. The GMP estimate released today is based upon more complete data set, and data sets are getting better as we roll along here. That's one of the reasons you see things that were not seen previously. The increase in real GMP in Q3 primarily reflects positive contributions from personal consumption expenditure, that's PCE, non-residential fixed investment, state and local government spending. Residential fixed investment exports were partially offset by negative contributions from private inventory investments. Imports, which are subtracted in the calculation of GMP, increased. Decrease in real GMP in the third quarter primarily reflected a downturn in private inventory investment and a deceleration in exports, fixed investment, and state and local government spending. Real gross domestic income, that's GDI, which measures the value of production of goods and services in the U.S. as costs incur and income earned in production, increased 2.7% in Q3 compared with an increase of 2.2% in Q2. The average of real GDP and real GDI, a supplemental measure of U.S. economic activity that is equally weighted on GDP and GDI, increased 2.3% in Q3 compared with 3% in Q2. Footnote, estimates are, this is quarterly estimates, are expressed at seasonally adjusted annual rates. Gross domestic purchases increased 2.2% compared with a 3.6% in Q2. The price index for gross domestic purchases, which measures prices paid by U.S. residents, increased 1.3% in the third quarter compared with an increase of 1.2% in Q2. Excluding food and energy, the price index for gross domestic purchases increased 1.3% compared with 1.2% in Q2. Current dollar GDP, the market value of goods and services produced by the nation's economy, less the value of goods and services used up in its production, increased 3.3%, or $146.5 billion in Q3 to a level of $18,060.2 billion in the second quarter. Current dollar GMP increased 6.1%. GDP, okay, are 264.4 billion. Some revisions here, we'll go through those. Real GNP, the annual estimate 1.5%, second estimate 2.1%, and 1/10, and the third estimate at 2%. Current dollar GDP, the advanced estimate was 2.7% and 3.4%, and down, that was in Q2, and down to 3.3%. Not bad at all. Real GDP, we got the second estimate at 3.1 and the third estimate at 2.7. The average of both GDP and GDI, the second estimate 2.6, and we end up with the third estimate on more accurate data set at 2.3. Gross domestic purchase index at 1.3 in the advanced estimate, the second estimate at 1.3, and we end up with 1.3. Corporate profits from current production with inventory valuation adjustment, IDA, nonetheless decreased 33 billion in Q3 in contrast to an increase of 74.4 billion in Q1. Profits of domestic financial corporations increased 1.8 billion in Q3 compared with an increase of 0.6 billion in Q2. Profits of domestic non-financial corporations decreased 11.8 billion in contrast to an increase of 24.3 billion. The rest of the world component, this is a fairly new component here of profits, decreased $23.1 billion in contrast to an increase of 11.4 billion. This measurement is calculated as a difference between receipts from the rest of the world and payments to the rest of the world. In third quarter, receipts decreased by 3.5 billion and payments increased by 19.5 billion, or 5/10. Taxes on corporate income decreased 6.9 billion in Q3 in contrast to an increase of 31.3 billion in Q2. Profits after taxes decreased 26.2 billion in contrast to an increase of 39.2 billion in Q2. Dividend increased 26 billion in Q3 compared with an increase of 1.2 billion in Q2. On distributed profits decreased 52.2 billion in contrast to an increase of 38 billion. Net capital flow with IVA, the internal funds available to corporations for investment, decreased 35.1 billion in contrast to an increase of 48.1 billion, that would be in Q2. IVA and CCC adjusted are adjustments that convert inventory withdrawal and depreciation of fixed assets reported on a tax return. Historic cost basis to the current cost economic measurement used in national income and product accounts. The IVA increased 35.9 billion in Q3 in contrast to a decrease of 78.7 billion in the second quarter. CC adjusted decreased 1.3 billion in contrast to an increase of 7 billion. Corporate profits of domestic financial corporations increased 2.5 billion in Q3 compared with an increase of 34.3 billion in the second quarter. Profits of domestic non-financial corporations decreased 11.1 billion in contrast to an increase of 17 billion in Q2. Third quarter decrease in profits of non financial corporations primarily reflect a decrease in manufacturing of durable goods, specifically motor vehicles, machinery, and a decrease in utilities. Gross value added of non-financial corporate business, that is real gross value added of non-financial corporation in the third quarter, profits from current production. And that does it basically here. And if we look at the advanced, this is revised data, dates in 2016. We'll come in on January 29th. We'll have the advance here, and we'll have the second estimate on the 26th of February, and finally on the 25th we'll have the third, which is basically what we just touched upon. Now let's move to oil and oil pricing. Oh, wait a minute, just a second here. We'll start out with Reuters, above oil prices above $37 as U.S. supplies tighten, still near a 11-year low. There, the Brent crude settled up 53 cents. They're not much at all, actually. Traders, of course, were off on holiday. Brent crude has halved from the $100 a barrel 18 months ago, no doubt. Gluts and other things there. Let me just get here with the gasoline averages. This is on the 17th of December. In the U.S., average at $2.53. There on the East Coast, $2.74. In New England, 2.13 there. And the lower Atlantic, 1.983. In the Midwest, 1.890. Gulf Coast, basically about the same. Rocky Mountain area, $2.14. And on the West Coast, 2.292. So basically, we look at basic cost here. Has changed. Obviously, some pricing is down, no doubt. We won't do diesel prices, but just looking at gasoline in November, 21% went to taxes, distribution and marketing, 19%, 14% to refining. As in gasoline and crude oil was 46% of your costs when you a gallon of gas. Diesel, 21% to taxes, 22% to distribution and marketing, 17% to refining. That's 17% of that cost. That's based on $2.47 a gallon. That was diesel and gasoline at $2.16. So you can see taxes 21%, distribution 19%, refining 14%, and less than 50%, 40%, is the actual cost of the crude oil itself. So that in itself is a very interesting view of where things are, and we were just sort of looking at that. I'll take a quick look at home heating oil. I'll get it out in a minute here. Not as much of that around as we saw years ago. The average there, let's see, about $2.50. Well, wait a minute. Yeah, about $2.50. Let me just look at this just a second here. Well, about $2 actually is where we are. I'm just looking at the graph here. On the East Coast, some of that is still around, basically $9.8.984. In the Rocky Mountains, and this is also residential, this is propane, I'm sorry about that, is down less than $1. Remember when it was very expensive for propane, and get the home heating oil. I was actually reading propane, sorry about that. It is down, propane basically about the same thing, $2.21. It's $1.08.37 in the Midwest. In New England, it's 2.154. So a little bit different. Those costs have went down also, saving consumers quite a bit actually of money involved there. And let's see. This is from the U.S. Information Agency. See if we find anything else here of, as they say, importance to the. Let me just very quickly here. There is a new mapping system out, and we'll put a link to this up. This is a mapping system, highlights energy infrastructure. It is one of those visualization things here for the next 2 weeks. Today's energy will feature some of the favorite articles. Anyway, there is basically co-production. It's something we don't look at very much around here. This is ending in December the 19th. Thousands of what they call short tons at 15,000. A week ago it was slightly above that, and a year ago up there. So annual co-production by states. One of the graphics put forward here. The production estimate is 8.5 lower than last week. The estimate co-production total approximate is 14.7 billion short tons. East of the Mississippi, co-production totaled 5.8, and west of the Mississippi 8.5. U.S. To date co-production total 870.2. That is 10.3 lower. On our companion program, Bostonred, we did a special on the coal miner, and we invite you to go there and find out some of the facts and where they are there. And the short ton, I'm not sure about it. We'll look very quickly here. We'll go to Baker Hughes. Short ton is a unit of measurement equal to 2,000 pounds, 907.18474 kilos, which is commonly used in the U.S. is known, which is simply known, just as a ton. Well, you find something out every day here. Short ton, is usually simply a ton, without regard for the ton. That's 1,000 kilograms. All right, it was known as a metric ton. And the metric ton is a long ton. That's 2.24 pounds, or 1,016, and we won't get the kilograms. Therefore known as the imperial ton. So the U.S. applications were on Pacific tons means a long ton. For example, naval ships, a metric ton there. Anyway, various things. The short ton, that's 2,000 pounds. In the UK, what do they still use? The word ton is taken to refer to a long ton, a metric ton, distinguished by tummy. Anyway, internationally, to avoid confusion, which is the short ton, long term are a metric ton. So anyway, now you know more about tons than you want to know. To Baker Hughes and the rig count here, this is on the 23rd of December. 700, we're out there. -9. December dates prior, December 18th. 1,140. That's the minus there. And in Canada, the count is 126. That's 36 minus there, and change from last year. That was the 1,140. 130 rigs down, and internationally down by 2. 1,109, and that is 215 there from minus that from November. So Baker Hughes issued a rig count as a service to the petroleum industry since 1944, when Hughes Tool Company had Baker Hughes, published by major newspapers, no doubt, and the working rig location is provided by rig data. So maybe we'll put a link to the Baker Hughes count. Let us move on here to the BBC. We'll get there in a minute. This is from OPEC. Oil prices will reach $70 a barrel by 2020. According to OPEC, prices fallen from $110 in the summer of 2014 to less than $37 now. OPEC says prices will begin to rise next year, and a long-term rise due to higher exploration costs. Well, that better be interesting right there. And OPEC producers, it expects the market share of OPEC producers to shrink by 2020 as rivals prove to be more resilient. The group currently accounts for 30% of oil production. Now that's down from 50% in the 1970s, when the export ban was enacted in the U.S., and due to recent tax legislation, it is now been scrapped. The World Outlook report, OPEC says, expects production supply growth from the U.S. snail to slow dramatically next year as production struggles to quote with lower prices. I don't know if we'll check that out. Nice graphic here. The report also highlights huge reductions in spending on export there. So this is so we get over to this PDF here. It actually, they link to the PDF, and we'll see if we can get the PDF up here and perhaps dive a little bit deeper into this. We always like to dive as deeply as possible into many of these things. And, well, wait a minute here. Okay. Well, we'll get the report here in a second. And they also have an interactive version here and of their report. It's interesting now. And 2040 exactly. Well, we'll hit the executive summary. I don't know if we'll have time for the whole thing, and that's 20 pages. So we'll link to these. Basically, here a little bit deeper dive here. This is the 9th edition. This is 2020 to 2040, 2015 to 2020. That was what was highlighted before. And the medium-term annual real GNP rates in the reference chart here, well, 3.3, 3.2, that's in 2015, 3.5 they expect in 2016. This is the world at large here. And 3.7 in 2017, 3.8. You can see where that is going. And 3.6, 14 to 20. Economic growth, however, remains below its potential as legacies of the Depression, our term there, remain. And we'll have this up growth for 3.5 on the average in the global economy. That's in 240. So we'll do more. The configuration of the world economy will change significantly in the next 25 years. In 240, China's GDP will be 112% or 60% higher than the OECD Europe and OECD America relatively. India's will exceed the Asia Oceanic there and various other things. We could actually spend a lot of time on this. The need to develop oil production in more expensive areas will drive long-term costs higher. The outlook of the price is assumed to average $55 during 2015. Well, it didn't happen. And will increase $5 a billion barrels each year, $80 by, 220, reflecting a gradual improvement in market conditions. Translate the real prices. The price of oil is assumed to be $70.7 per barrel by 2020. Now that is in 2014 prices. Long term here to $95 a barrel in 240. Now that's in 2014 prices. Now again, you can see what is going on here. Correspondingly, normal prices reach $80 a barrel in 2020, rising to $130 a barrel by 2030, more than 160 there. It should be noted that these are not price forecasts but working assumptions to guide development scenario here. The reference case takes into account policies already in place, but also excessive policy processes will evolve over time. And moreover, changes in the energy mix are expected to continue. Fossil fuels will continue to dominate the mix with 78% of the share by 240. Wishful thinking there. In the next 20 years, oil will remain a fuel with the largest share of global energy use. However, its relative weight will decline in the next decade. By 2030, oil is expected to drop to 28%. A similar is expected for coal. By 2040, natural gas is expected to have a larger share, making up 28% of global energy demand, with both oil and coal having lower shares by then. However, a combination of oil and gas expected to supply around 53% of global energy mix by 240. And this sort of a chart here, world primary demand reference case here, year on this. And we'll have to use this chart again as to where they are, medium level outlook. This is what they call a reference case. Short and long-term oil demand growth estimates are clearly impacted by recent decline in prices. Oil price decline is expected to increase 1.5 million, at 1.3 million barrels per day in 2016. A little bit of wishful thinking here. And let me just move down this and wrap this part of it up here with their. This is their executive summary, and you can see this is a fairly extensive look at petroleum costs. If one is interested in that, last year's outlook, the need for additional closure was assessed at some 5 billion barrels per day. That was between 2014 and 2020, since 1.2 billion of closure occurred during 14. So this is that particular story. Let me just move on here from oil. And India puts brakes on Facebook. 5 banks pay no UK corporate tax in 2014. That's an analysis showed. Therefore, this is J.P. Morgan, Bank of America, Merrill Lynch, Deutsche Bank, Nomura Holdings, and Morgan Stanley paid no corporate tax at all. The banks offset past losses during their taxable incomes from 2013 and 2014. The banks have so far declined to comment. Naturally, sure. A moral issue from Laura Lemmy, the investment firm, told the BBC there are a number of reasons why banks pay little or no tax. Certainly in the case of Deutsche Bank, there are questions as to why it's not paying UK tax. Some of the other banks, it's because they have big losses. And of course they have a carryover value there. In 2014, the Chancellor Exchequer George Osborne said the amount of profits in established banks that can be offset by losses carried forward would be limited to 50% of all their profits in 2015-2016. But banks were given better news in the 2015 budget, when Osborne said corporate taxes would be cut to 19% and 18% in 2017 and 2020. From January 16, banks will have to pay an 8% surcharge on their profits. This is being introduced as an alternative to the bank levy on banks' balance sheets, first introduced by Osborne in 2011, which is now being cut back over the next years. So this is from the Tory government there. We'll do the numbers. Now we put that on our Twitter feed for your benefit in terms of going there. Let's go to the markets and we'll look at Friday holiday weekend in many places. So thus not as much activities as we would normally expect on Friday. The BBC Global 30 was down 0.4, and the FTSE on Thursday closed on Friday. Let's see, 7.35, positive there. In Amsterdam, they were at 0.40. The DAX 238.87. In Paris, they were down 11.35. In Brussels, 2.20. In Madrid, 41.90. In Zurich, 189.92. In Moscow, they were down, and it was on Wednesday in Zurich. And that was on Thursday in Paris and Wednesday in Frankfurt in Germany. In Moscow on Friday, they were down 8.50. They at least work on Friday. Anyway, nonetheless, in Johannesburg, on Friday, 294.82. In Bombay on Thursday, in the negative 2.57. In Karachi on Wednesday, also in the negative 132.41. In Lahore, in the negative on Wednesday, 54.34. In Colombo, 4.007. In Tehran on Wednesday, 6.50. In Sydney on Wednesday, 62.62. The Nikkei on Friday, in the negative minus 20.63. The Hang Seng in Hong Kong on Wednesday, 97.54. In Shanghai on Friday, 15.43. In New York on Thursday, they were in the negative 50.44. The Nasdaq also on Thursday at 2.53. The commodities market out in the Midwest city of Chicago was down 3.30. In San Pablo on Wednesday, 534.32. And in Mexico on Thursday, in the negative 51.40. Now to the commodities. We'll get Brent crude, etc. And look at the pricing. The Brent crude futures were down $53. Down 53 cents at $37.89. No spot. Oh wait, I'm sorry. We do have it. I'm looking at something else here. The Brent crude futures, we got that right. And the spot, that was on Friday. The spot on Thursday at $38.02. And West Texas Intermediate crude, $38.10, up 60 cents. T-Bone pick and jump for joy. He remembers $15 a barrel oil. Cocoa futures were down $50. Gold, $1,071.90. That's on the Forex. Dubai did not report in. That was on Thursday. And the Unex light futures. Cocoa was up $1. Corn was down 50 cents. Robusta coffee was down $8. And the Bloomberg Commodity Index on Thursday was up 38 cents at 78.49, or 0.5%. That will do it for us. For those in business, have a short week, as we will be back next week in the new year 2016. The consumer have kept their eyes on the ball. Retailers, incidentally, we didn't get that in, are struggling to make some of their projections for the for the holiday shopping, I should say. They had a banner shopping season on the Thanksgiving, the day after, the tradition called Black Friday, and at Cyber Monday, but the air soon went out, and that was the end of the ball, so to speak. There were various boycotts on, protests going on in the Midwest at a place called the Mall of America in Chicago, on the Miracle Mile downtown there, and solidarity protests in New York. And on the West Coast, how did it affect shopping? Well, some, but increasingly people are going online. I saw an article, incidentally, today. Sweden, I believe, I'll look at it real quickly here, going more or less to a plastic economy. Is a cash-free future near in Sweden? We'll see here. This article actually is in the New York Times as to what is going on in Sweden. There, cards are still king there, with nearly 2.4 billion credit debit transactions in 2013. So you can see they are there. Swiss bank vaults held 3.6 billion krona in notes and coins, down from 8.7 billion in 2010. The Bank for International Settlements, that's according to them. We've talked about the Bank for International Settlements before. And from the Swedish Bank Association, they are making substantial fees. In other words, they're making more money on these cards than they used to make the old-fashioned way with paper money. At the University of Gothenburg, students say they exclusively use cards, electronic payment. No one uses cash. I admit myself, I use more cards now than not. And even at college, we use cards. We do use cash sometime. And somebody who's homeless in Sweden, 65, for 4 years after losing his job as an IT technician. He has a place to live now, sells magazines on the street, a charitable organization. I used to see those when I was out in Chicago. Begin using a mobile card reader to take payments after noticing that no one carried cash. Now people can't get away, I said. Who carries a sign saying accept Visa, MasterCard, and American Express? When he said I don't have change, I tell them they can pay with the card and even by SMS, referring to text messaging. His sales have grown 30% since he adopted the card reader 2 years ago. Basically the same thing. A lot of people in the U.S. use card readers for all kinds of purposes. There are various organizations that offer those types of services, including PayPal and various others that will accept those payments foreign. Good day.